Hey everyone. So, if you're paying any attention to the world of tech, you've seen it. AI is everywhere. It's in every headline, every investment portfolio. The money flowing into the space is just unbelievable. But is it a real, sustainable boom, or are we watching a bubble that's just waiting to pop? Today, we're going to dig right into that question, pulling from a really great discussion by the team over at TechCrunch's Equity podcast. And this is it, right? This is the $1 million or maybe $1 trillion question on everyone's mind. We're talking venture capitalists on Sand Hill Road, all the way to developers coding in their garages. The speed and the sheer scale of the investments have the entire industry just buzzing with this mix of crazy excitement and, honestly, a little bit of anxiety. And look, there's a really good reason for that feeling. We're seeing company valuations like triple in just a matter of months. The pace of these deals is absolutely frantic. It has all the classic signs of a market that's running red hot. The big question, though, is whether it's running too hot. Okay, to put this all into perspective, let's just look at this number, $300 million. Now, that was the size of a single seed round for an AI company. And for those of you who don't follow fundraising, a seed round is supposed to be for a company that's just getting started. A number this big is, well, it's pretty much unheard of. It signals this incredible level of investor belief, or, maybe a classic case of market frenzy. And it's not just the little guys, the early stage startups. At the complete other end of the spectrum, we're hearing about corporate commitments of over $100 billion being set aside just for AI development. This isn't just venture capital anymore. It's a full-on tidal wave of money that's reshaping the entire tech landscape. This quote from the equity team's discussion just perfectly captures the mood right now. There's this feeling in the air that while the opportunity is historic, no doubt, the mad rush to get a piece of the action might be getting way ahead of the actual underlying reality. Right. With all this money getting thrown around, where is it actually going? What are investors betting on that's going to make real sustainable money down the road? Is everyone just trying to build the next viral chatbot? Or is there something, deeper going on here? Well, the answer, for now anyway, seems to be a classic picks and shovels play. You got to think back to the gold rush, right? You had thousands of miners digging for gold, most with very uncertain success. But the people who really made a fortune, they were the ones selling the picks, the shovels, and all the supplies. The exact same logic is being applied to AI right now. So what are today's picks and shovels? They're AI data centers. We're talking about the raw, physical foundation of this whole AI revolution. This means powerful servers, super specialized computer chips, and the massive, massive energy infrastructure you need to train and run these enormous AI models. This is where a huge chunk of that investment cash is heading. And this focus on data centers is creating this huge ripple effect. It's completely reshaping how people think about infrastructure investing. It's even pulling in some really unexpected players. I'm talking about large-scale institutional funds who normally wouldn't touch a typical tech startup. They're not betting on an app, they're betting on the fundamental foundation of the entire industry. But, and this is where things get really interesting, a fascinating counter-narrative is starting to bubble up. Not everyone is convinced that just building bigger and bigger models is the only way to win. A whole different philosophy is starting to gain some serious ground. So this basically creates two distinct camps. On one side, you've got the scaling race. That's the belief that if you just keep adding more data and more computing power, you'll always get better results. But on the other side, you have the contrarian bet. This is all about focusing on building smaller, more efficient, and highly specialized models that cost way less to run and might actually be better for certain jobs. And this isn't just some academic theory. The TechCrunch's discussion pointed out some really prominent people, like the former AI research lead from Cohere, who are literally leaving these big established companies to build new startups based on this exact principle. They are actively, financially betting against the idea that bigger is always better. This whole debate really brings us to the ultimate challenge that hundreds of these new AI startups are facing. I mean, it's one thing to create a cool demo that captures everyone's imagination for a week, but it is a whole other thing to actually build a lasting company from it. And we're seeing this pattern play out again and again and again. A startup launches some really cool viral demo. It gets millions of users like overnight. But then comes the really hard part. Step 3. How in the world do you convert all of that attention, all of that hype, into a real profitable product that customers will actually pay for in the long run? So, when the initial gold rush excitement inevitably cools down, what's going to be left? Will the winners be the giants who built out that massive infrastructure, the digital picks and shovels? Or will it be those nimble contrarians who figured out a way to create real value more efficiently? Honestly, that is the fundamental question that's going to define the entire next chapter of AI.